Hello and welcome to another MCO market update on ADA. The ADA chart here on the larger time frame is still moving in a triangle pattern. That's unchanged from the previous videos. Probably or at least possibly we could be working on the D wave of that triangle. That's at least what we are tracking right now. The D wave of wave 4, there could then be a higher low in wave E to complete the fourth wave before we go higher in the fifth wave to round about $1.72. $2.36 plus. These would be the next upside levels to watch on the larger time frame, but the triangle itself doesn't look complete. And reminder, the 51-cent level must hold to keep this triangle pattern actually alive as a valid scenario, because the wave 4, or let's say the E wave of the triangle, must not break below the C wave low at 51 cents. So it's a very clear condition. If we go below that level, then it's very likely that we're going to test the area in the around the August, September, October lows of last year, around 30 to maybe 35 cents. So that's the larger time frame. Looking at the smaller time frame for ADA, let's open that chart. And here we can see that the market is in the resistance area we were tracking, right? So at the moment, ADA is moving up still in a three-wave pattern. So we have reached resistance. The microstructure has been followed nicely as expected pretty much. Why? Because I highlighted to you here that the 51-cent level is important support. That C wave in the white triangle pattern must not break below the 51-cent level. That level held. Yeah, that's very important. We could now be in the D wave of the triangle, which is an ABC structure. A wave, B wave, C wave. The support zone remains unchanged. It's between 54 cents and 61 cents, or 60.2 cents actually. That's support for an internal B wave pullback from where we could start a C wave rally afterwards. And in this ABC structure, we need to hold this support zone for wave B. Again, 54 cents to 60.2 cents. That's very important, because any break below will likely shift probabilities towards the yellow scenario, which would be the bearish count. But at the moment, I at least don't see any evidence that the bears are taking the lead. That would require an impulsive looking decline that actually breaks below support at 54 cents. And then also below 51 cents, which is obviously the invalidation line. That's the objective line. I mean, a break below Fibonacci support would not necessarily be a disaster. It wouldn't be great, but it would, it could still, there's some wiggle room, There's some wiggle room. Below 54 cents, it's getting or becoming quite clear that the bears are taking the lead, and then 51 cents is the key pivot, main level to watch, And, as long as we're holding that orange support region, we can get a C wave rally to the upside. So idea would be that at some point we get that B wave pullback, and then maybe 5 waves up in wave C. Then an E wave down and up breakouts. That would be, at least in theory, how the triangle should ideally unfold. Now, that's not an exact prediction, because triangles often morph, they like to change, the subwaves are all corrective. However, we have, based on the triangle wave count, we get very, very clear parameters to watch. So, got it. So got very, very clear parameters to watch, and I think it's just grinding sideways, right? The thesis was that this initial move up was an A wave, this was a B wave pullback, and we would get 5 waves up in wave C. I mean, it's done that. It is a 3-wave move completed. Doesn't mean that the A wave has to complete now, because A waves can also be 5-wave movements, which would be a little bit more bullish. But bear in mind, we're talking here really about the nanostructures, really the smallest structures, and I'm actually quite pleased that it followed that micro projection so nicely, because it reached the 66-cent target, and it's now consolidating below. It could very well be that it's extending the move higher. I mean, it really depends on what happens here now. This is a corrective pullback, so it generally leaves the door open for higher. The question is this part of wave B? Which it absolutely could be. I mean, one idea I have is that there's an A wave down, B wave up, C wave down. We're doing something like that. This is definitely something we should consider. But if we don't even reach the support zone and it pushes higher more directly, then 71 cents is next for basically an extension in wave A. But that would not be a problem. It would probably then indicate rather hey, wave A is forming a 5-wave move up in a diagonal. So no real change here. Levels are unchanged. Next resistance at 71 cents. If we go lower, pay attention to 60.2 cents and 58.4 as next support levels. Important is to mention there is no sign that a substantial top has formed. Pullback is corrective. That's the update about ADA. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.